if we continue to see interest rates hover around 7% or higher like they have been the last 6 weeks, then are we going to see home prices go down? We'll cover that and more on this week's weekly National Housing Market Update. As for a lot of people, if we're looking at making decisions in the future or potentially looking at better strategic decisions if selling in the very short term, the weekly Housing Market Update can help us a lot. So as we look at, interest rates have been at 6% or higher for the last 7% or higher for the last 6 weeks, is that home prices are not going down. The inventory is continuing to increase a tiny bit, but as you look at the year over year numbers, inventory is down quite a bit. And as you look at the higher mortgage rates, guess what? In a stronger economy, they are not impacting home prices. Many people are still purchasing and or selling for major reasons of the D's: diapers, divorce, death, diamonds, dollars, meaning a lot of people experiencing an increase in that. And so as we start looking at like what happened last year at the end of September, is as rates increase again once more in September, could that potentially derail what has been happening? We don't see any signs of that, but we will cover it as what we see here with 488,000 single family homes on the market. Again, that's 10% fewer this time last year. It's only 1% increase week over week. So the big takeaway from this is people are not impacted as much when it comes to the demand or people that are out there purchasing homes with 7% interest rates. What it is, they are impacted heavily in the moment that there are changes in interest rates. And if those changes are dramatic, like they were last September, we start to see heavier corrections. But overall, as we start looking at where we'll probably be by the end of the year, is that we'll probably have about 20% less inventory ending this year than we did ending last year or the start of this year, which is then kind of moving into our next slide, which is that just unfortunately sellers are absent. As you look at the July to September of last year, you saw this dramatic decrease in new listings that came to the market. And that was due to the major correction with the increase in interest rates in that moment. But as you can see now, we've continued to not see this decline of new listings per week. In fact, it increased just like the seasonality. But now what we want to start looking at, does that remain in this kind of week over week, or do we start to see it decrease with normal seasonality? And the likelihood is that, last year, a lot of people that saw the bearish sign in the housing market could have easily seen that the bullish results we have had so far this year is due to the fact that there's just very little new listings come in the market. So even with the decrease in the demand, you could just assume the decrease in the demand with higher rates, but then the decrease in new listings per week would equal out to a good housing market. So you can see new listings this week, only 61,000, which again, as you just start looking at previous years, 2022, 2021, 2020, 19, 18, it's less listings than we've seen over the last 4 years on any given period of time, all the way since back in almost about March. So again, we are in a complete supply strained market, which is what is really allowing the home prices to continue to stabilize and or in many markets still increase at smaller amounts. So how do we know that? As you start looking at the pending contracts, remember, is that you can see in this kind of red line to the lighter red line of what happened last year. As you start looking at the, June, July, August market, you could see that from there all the way to December of January this year, we saw a dramatic decrease in the amount of homes that got pended. And as you can see here, starting in about May of this year, that number has actually stabilized and somewhat stayed the same. The big difference that we want to see is just overall, as the new listings come to the market, this dark red line is the listings that are pending. And then overall, lighter line is the exact homes that came on the market newly listed that got pending right away. So you can see that that gap has not changed much. And if that gap increases, what you'll see is that our average days on market will grow. But the nice part is, as long as that red line, meaning the pendings, does not dramatically drop like we saw last year, is that just goes to show that the housing market is corrected and or stabilized, and most likely will predict whatever's happening in the current market to remain. So the most important part as you start looking at this, though, is that that's about 25 to 30% fewer transactions happening at the end of this year as they did at the beginning of 2021. So for a lot of people that are in the real estate market or those that are part of the vendors and partners, there's a lot less going around for the people that are out there. So the good news is for most people entering the real estate market is hopefully you'll be working with more real estate professionals that have local expertise, seasoned experience, and can withstand the challenges of a stabilizing market compared to the mania that a lot of people got into this profession for the reason that things were just good. But as we know, things are always good in real estate from a long-term perspective. As you can see here, the median home list price at $450,000. As you start looking at, remember the median home price, why this is not necessarily always the best use, but you can see it does allow you to see some year over year change. And that median number all the way from January of 18, as you see this continue to increase and incline, is what we were talking about, is that this is the long-term outlook on the overall year over year compounding years benefit of owning a home. But then as you start looking at this next graph here, the median price of homes in contract being $385,000, is that's 3% higher than last year. So you can see at the beginning of this year, we were hovering a little bit underneath the year over year numbers from prior year last year because we did have to correct, stabilize, and rebound from some depreciation that we saw in the back half of the year last year. But as you can see now, the appreciation year over year has started to happen nationwide and for many local markets, especially like the Denver metro. There are hyper-local markets that are different, but overall, home price appreciation has started again. So to answer the question that we kind of kicked off with is, are these interest rates impacting or going to cause home values to go down? That answer is no. Home prices are only continuing to go up, not dramatically. So for anybody who is looking to make a change in buying, selling, or investing, it is a normal time to do that. So do not fear. But if you need a 15-minute strategy session or a little bit more information, as always, please don't hesitate to reach out locally. And for those all across the nation, happy to get you connected with the top 1% of community of real estate professionals to advise you regarding your situation. But from us to you, another week in the market. And we look forward to seeing you next week.